Okay, so hope everyone's doing well. My new goal is to try to do 4 to 5 videos a week, and we'll just see how that goes. So typically, make any comments below on your thoughts, but what I'm going to do is probably review the SPY, maybe Apple, Facebook, and maybe a few Forex markets. So anybody watching, just leave a comment, and if more people are asking for Forex, I'll review that more. Or if most people just want to review the SPY, I will review that more just in depth. But I'll start with the SPY. So weekly chart, pretty important. We have a bear body, even though it's very subtle. 5-minute chart, well, daily chart. See here. Very tight channel. You've heard Al say many, many times, we're at these highs. The risk is far, so the risk is big. Therefore, traders have to reduce risk, which means they ultimately have to reduce positions, and therefore we'll probably get a pullback. So 5-minute chart, I'll just start with Monday. '25th. All right, so Monday, we gapped up far above the prior day's range. Tight trading range, so probably going to pull back sideways to the moving average. Typically on a gap up, you either get a double bottom or a wedge bottom like this, 1, 2, 3, and a wedge top or a double top. So in other words, you get a trading range and a breakout mode. Typically you do not, we had that today, we had that on Friday. Typically you do not just go straight up like here, and this was rather weak. So if you bought here, sideways, 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 25% chance you're going to fall below there. We'll cover that in a minute. So not a great buy above bar 1. It's a limit order market. Sellers above, buyers below. First 5 bars of the day, you can tell that you're in a trading range. There's going to be buyers below, there's going to be sellers above, and there's going to be buyers at the moving average. Therefore, not a great sell. It's better to do the opposite. Better to buy down here, better to sell up here, better to sell. 3 consecutive bull bars, probably won't get a 4th. Traders sold also. Bars are getting smaller. So bull bar, equal size body, maybe a little bigger than smaller. Bear bar, another bear bar, but failed to break below. And here we have a low one short, but at the moving average, it's a bad sell, probably a good buy, which is why we went outside up. This is probably for the morning at least, the most credible buy signal here is right here at 940. Stop entry buy, reasonable to bet that we'll at least get a test of the high of the day, maybe go a little higher. So decent follow through, breakout bar, but however, as soon as we got to a new high, rather weak, second entry short, bulls definitely get out. Aggressive bears will sell, other bears will wait and see what we get. 3, 4, 5 consecutive bear bars, although they're weak, probably strong enough for a second leg. So if you're short, you do not get out above here, and probably best just to stay short, betting on a new low of the day. Should have to be open at this point. You know the range is going to expand. Well, I don't want to do that because of the size of the range, make the bars too small. So probably tight trading range, breakout mode. However, you got pretty reasonable to expect that we'll test the gap, maybe try and close it. Well, let me do it like that. It's just easier to see it. Well, And just by the way, so kind of parabolic buy climaxes on the prior day. Three pushes up, 1, 2, 3. Typically when you get this and you don't touch the moving average for many bars, especially in the morning, you know you're going to touch it. So therefore you get a trend line break sideways for 20 bars. You have to be open to this just being a trading range. It looks like a trading range. Spike, pullback, channel, probably going to test the bottom of the channel and form a trading range, which is what we did. And now back to this day. Strong breakout. Maybe you could argue that we're already in a trading range, which we are. 20 bars sideways easily. So at this point, bear breakout, bottom of the range, probably a surprise and probably going lower. However, again, what will the follow through look like? Perfect doji. It's not a bear body, but it's not a bull body. So better for the bears. Probably at least a second leg down and a surprise. Maybe some sort of measuring gap with this high and these lows going down. I think this is the more important measuring gap. So tight trading range, not great. Definitely not trending price action. But you have to be open small. We're trying to get a small pullback trend. Although we have not broken below these lows, we have an obvious measuring gap. Now, again, going lower, breaking below the lows, but bad follow through. 3 pushes down, 1, 2, 3. You don't have to get out of shorts. However, it is not that great. It's not that great of a sell above. You can say sell climaxes. It looks like a leg in a trading range. You're at pretty much a measured move target. So again, you don't have to get out of shorts. It's reasonable to get out of shorts, maybe a 50% pullback. Well, close to it, not quite. I'd get out of shorts above that bar. If you did not, and maybe you get short again. However, this does not look very strong. We're just not. Every time you get a breakout, you go sideways, breakout, sideways, breakout. So again, if you're short, if you got out up here, maybe you get short again, but again, that's not that easy of a thing to do. Just look at price action. A little easier to see it. 3 obvious pushes. Try like that. So, but minor. This is a tight channel, so probably a minor reversal. What I can do actually. Let me do one thing real quick. I'll just have to do it like this. One nice thing about TradeStation is I heard they removed the background dragging on the new update. Well, I went back to the old one. I was just not a fan of the new one. So, one moment. There we go. Be a little easier to see it. So anyways, again, tight channel, probably have to go sideways, minor reversal, but okay to get out of shorts. For me, I'd rather look. I don't think we're going to go that much lower. Looks like a trading range. We've gone down for at least 2 legs. Maybe first leg pullback, second leg, but doubtful. Reasonable to get out of shorts, but again, still minor. Probably have to form some sort of base. You can argue this is the second failed breakout of these lows. One thing I do want to say, trading range day, most likely. We're not far from it. We went a little below. If you take the high to the open going down, we went a little below it. So you have to be open to price coming back here. Low 1, low 2 short, but again, dojis, a lot of bull bars. This does not look very strong for the bears. Maybe a double top. Bears want double top bear flag, mesh and move down. If I was long, I would probably get out. If I had to do anything, I would sell here, but fairly tight channel. There's nothing wrong with selling, but I'd be quick to get out. So maybe you sell, put a stop up here or up here. And then I would definitely get out of shorts here. It's a breakout pullback. You can call it a head and shoulders bottom, which is always a higher low major trend reversal. So small trend line. So in other words, the left shoulder, head, right shoulder. But really, this is a tight channel, trend line break, and a retest. My only problem with this being a higher low major trend reversal is the fact that, number one, it's forcing you to buy at the moving average, tight trading range, not that much of a trend line break. So if you do buy, I'd be quick to get out of shorts, probably stop down here. And that's what I mean by what I was saying. It's not a great buy because it's probably minor, only a few bars up, a few bars down. Bulls bought, immediately got out. So why did this bar right here happen? Well, think about it. So you have three pushes, 1, 2. So you have double top. And very often, the market wants to trap traders. Creates a pain trade. It drives momentum. So if you think about it, if you're short, you're going to get out of longs most likely above this bar. Very difficult to hold short above it. If you're long and you went long here or you buy, either way, it doesn't matter, you're going to get out of longs here because this is a low probability trade. However, maybe 40% chance to test the open of the day. Well, it's reasonable. But if you're buying, you want it to go quickly. And when it does not, you'll get out quickly. Bears got out of shorts. However, if they see this failing, they've got to get short again, which is what they did here. Now, again, same problem, tight trading range. So probably going a little lower. However, so it's a good entry bar for the Bears. It's a triangle, 1, 2, 3, probably a final flag. And then bad buy signal, we got our second leg down. Hence why I said probably going lower. Doji, not a great buy. Tight trading range. However, I'd personally get out of shorts. It's a failed breakout below the low of the day. We found buyers at this low. Probably will find buyers here. And there you go. Strong breakout bar. So, again, I don't personally, if you really want to be technical, and then, by the way, bad buy. So let me clarify a few things. It's a give and a take. So if you're truly trading always in, you're going to sell. You're not going to get out here. You're not going to get out here because this is all minor. You're going to wait for a trend line break. So in other words, when you're short, your stop's up here. New low, stop up here. Better if it's up here or up here. And then you get a strong breakout, stop up here, stop up here. When you have these strong moves, I know, let's just zoom out a little bit. It kind of goes down in surges. So what I mean by that is traders buy every time we make a new low and they sell in pullbacks. So it's very difficult to swing trade. But either way, if you get out of shorts, if you get out of longs, technically you get back to short. I would not go short at the bottom of a trading range, even though we went lower, because you have this issue. The sell was up here. Maybe selling this close if you're quick. Again, I wouldn't do it. We have this obvious target down here from the high of the day, low of the day, projecting down. This is an okay buy. Again, tight channel. You're betting on a strong, sharp rally to the open of the day. And, that's your problem. So if you are buying, probably got to get out at the moving average. Definitely below that bar. And that's the end of the day. So overall, tight channel. Maybe ended up being a bear trend day. An important thing to note over here, the bulls could not close above the moving average. They did here and then quickly turned down. So for the next day, this is Tuesday, 26th, gap down, bear breakout below bear channel. Strong sell off, consecutive sell climaxes. Probably going to get a few legs sideways up. I think 2 hours of sideways up trading. Not a good buy below, not a great sell below, not a good buy above. Bear breakout. Let me fix the background dragging because it's going to look a little weird if I don't. There we go. So tight trading range, is that an okay buy? Sure, it's a credible buy. It's a double bottom, reasonable buy, stop below here. And you can see what happened. So why did this bar happen right here? 2 reasons. As I said earlier, we're getting a bear breakout below a channel, and everybody knows we're going to test the top of the channel because 75% of bear breakouts, 75% chance a bear breakout below a bear channel fails because channels convert into trading ranges. To me, this looks like, even though it's a trend, kind of looks like a leg in a trading range. So I'm expecting a bull leg in a trading range and the evolution into a trading range. This bar is very important. If you think about it, it's a bad buy. It's a bad sell, It's a bad stop entry short. It'd have been better if it could have closed on its low. Maybe with the bear body closing somewhere down here. When it was a bad buy, everybody bought it.